Is a market crash coming in 2025? That is the big question on everyone's mind right now. We have seen record high in certain sector, but also cracks starting to appear in the global economy. Some investors are excited and still chasing momentum, while others are quietly pulling money out, worried about the major downturn. The truth is, no one can predict exactly when the next crash will happen. But what we can do is prepare. In this video, I will share exactly how I'm protecting my portfolio in 2025. From the strategy I use to hedge against risk, to the types of stocks I'm holding, and even how I keep cash ready for new opportunities. If you are serious about building wealth and avoid losses, stick around until the end. This could save you years of financial pain. Let's start with the bigger picture. Why are people worried about 2025? There are a few main reasons. Interest rates and inflation. Central banks have kept rates high to fight inflation. While inflation has cooled down a little, rates staying elevated for too long could slow down economy and hit companies' profit. Global tension. Ongoing trade dispute, conflict around the world are eating uncertainty. Investor doesn't like uncertainty, and when fear rises, market tends to fall. Valuation. Certain sectors, especially tech, have seen huge rallies. Stocks like Nvidia, Tesla, and others are trading at very high multiples. That doesn't mean they will crash tomorrow, but it does mean they are more vulnerable if sentiment changes. Corporate earnings. If companies start reporting weaker earnings, market could reprice quickly. If you are looking for a broker to start investing, check out Tiger Broker Singapore. They are user friendly, offer responsive customer service, and make the trading journey much smoother, especially if you are just getting started. And here's a bonus. If you use my referral link and deposit at least 1000 USD and complete just one buy trade, you'll receive USD $5 worth of Tesla stock. This is a brokerage that have simple step, quick rewards, and a great platform. You will find my referral link in the description below. Feel free to check it out. Tiger Broker is currently running a SG60 campaign with SGX. Enjoy no custodian fees, zero commission for SGX listed securities. SGX CDP custodian fees for Tiger Broker is waived until further notice. No additional action required. This is a 3 months campaign, 23rd of July to 17th October, designed to reward both consistent trader and top performer. Trade SGX listed security during the campaign period to climb the leaderboard, and their prizes worth SG60 to SG 3800. We have already seen some volatility around earnings seasons. Now, none of these guaranteed a crash in 2025, but if you connect the dots, it's easy to see why investors are nervous. And when fear builds, being unprepared could cost you everything. Rule number one, don't get wiped out. When it comes to investing, my first rule is simple: don't get wiped out. Too many people focus on chasing highest return without protecting themselves from downside risk. But if you lose 50% of your portfolio, you will need a 100% gain just to break even. That is why protection comes first. Here is how I apply this mindset. Diversification across sector. I don't put all my money in one stock or one sector. I balance between equity, bonds, and cash. Defensive position. I like having exposure to stable dividend stocks and sector like healthcare, utilities, and consumer staples that holds up better when times get tough. Position sizing. I never overcommit to a single trade. Even if I love a stock, I make sure it doesn't dominate my portfolio. Section 3. Cash is a weapon. One of the most underrated strategy in investing is simply holding cash. Now, a lot of people think that cash is boring, or they will say it's losing value to inflation. But here is the reality. During a market crash, cash is king. Every year, I set aside some cash for the stock market. When strong companies fall back to their intrinsic value, that's when I deploy more money, buying in at a discount and averaging down my position. The problem most investors face is that they are always fully invested. When market drops, all they can do is watch their portfolio sink. But if you have got cash sitting on the sideline and you are not stuck, you are ready to act. I personally keep a percentage of my portfolio in cash at all times. Not so much that I miss out on growth, but just enough so I'm ready for opportunity. Think of it like dry powder, fuel that you can use when the right moment comes. Section 4, using option to protect. Now let's get into the strategy that many investors overlook. Option as protection. I'm not talking about risky gamble strategy. I'm talking about smart, defensive option plays that can hedge your portfolio. Protective puts. If I own 100 share of a stock, I can buy a put option. If the stock falls, that put gain value, offsetting my losses. It's like paying for insurance. Number 2, covered call. If I hold a stock long term, I can sell call option against it. That generate extra income which cushion my portfolio during downturns. Number 3, cash secure put. Instead of buying a stock outright, I sell put at prices I'm happy to own it. If the stock falls, I get at a discount. If not, I collect premium income. The beauty of these strategies is that they give you flexibility. You are not just sitting there hoping the market doesn't crash. You are actively managing risk. Section 5, how I'm positioned in 2025. So, how am I personally positioned right now? I'm holding on strong, profitable companies with good balance sheet. I have trimmed down position in speculative growth stock and I'm holding more cash than usual. I'm also actively selling covered call or cash secure put on stocks I want to own long term. And I'm prepared with protective put in case the market takes a sharp turn downwards. This way, no matter what happens, I'm covered. If market keep climbing, I'm still participate in the upside. If they fall, I'm protected and ready to buy more. Section 6, having the mindset. At the end of the day, the biggest difference between investors who survive crashes and those who don't isn't just strategy. It's the mindset. When market drop, panic spread. People sell at the bottom, lock in losses, and then miss the recovery. But if you are already prepared and if you got cash, protection, and a plan, then you don't panic. You stay calm and you even see opportunities while others are fearful. That is the real edge. Not predicting the future, but preparing for it. So, will we see a market crash in 2025? No one knows that for sure. But what I know is this: preparation beat prediction. Diversify your holdings, keep cash ready, use option to hedge, and focus on quality companies. And that is how I'm protecting my portfolio this year. If you find this helpful, hit the like button, subscribe for weekly breakdown, and drop a comment below. How are you protecting your portfolio in 2025?